Now, good goods, we are doing well. Look at now our tutorial 1, a continuation of accounting cycle. Our topic number 3 or lesson number 3 is a ledger account. This is with Dr. Geoffrey Mbuva of accountingnest.com. Most welcome. Now remember very well, already we have seen that the business has been financed. So the next thing is to see transactions taking place, the business is up and running, and therefore a ledger account is needed to record these transactions. So how do we go about it? Now, before we come to that, I want to make some clarification on this term ledger account. Now, the term ledger account are two words in one. So in the definition that I have, there are two, one for a ledger and the other one is for an account. So definition 1, what is a ledger? Simple. A ledger is a book where accounts are kept. Number 2, what about an account? Now, an account is a chronological record of all business transactions that affect a particular item, be it an asset, capital, liability, income and expenses, as it will be explained later in this tutorial. So I want you to note this, that an account keeps a track of all business transactions that affect a particular item. When we talk of keeping a track, then therefore it means that if a transaction has taken place and affects a particular item, it is that particular item that will open a corresponding ledger account whereby all transactions causing an increase or a decrease in that item will be recorded. And this implies that there is no need of keeping on opening new accounts or similar accounts when another transaction of similar nature takes place. For example, if a transaction affects the item cash, we simply open a cash account and that's all. We don't keep on opening new cash account or cash book whenever we have another similar cash transaction taking place. So that nota bene, that an account keeps a track, then it means that there's no need of opening more accounts. That one account will take care of all changes taking place to a particular item, and this applies across the board. So another term that is used, I've used in my definition, is a term business transaction. Now, this is any business activity which occurs within a specific period of time and can be assigned a monetary value. So you see, not all transactions will translate to monetary value assignment, and therefore they cannot be classified as a business transaction. So take note of that. Now, business transactions are further classified into two, namely cash transactions and number 2, credit transaction. So let's see what about cash transaction and what about credit transaction. What is the distinguishing feature? Now, cash transaction. It is a business activity which involves immediate, or what we call spot, exchange of goods and services with other goods and services, especially in the case of unbartered trade, stroke or trade in cases, which is common, or it may also refer to an immediate exchange of goods and services with cash. I want you to note this, that the term cash does not necessarily refer to hard cash in terms of hard currency or notes, but it implies spot or immediate payment for the goods or services bought. Now, the cash payment may take the form of either hard cash or a check, money order, or number 4, electronic transfers or any other legal mode of payment. I want you to note the following, that number 1, cash transaction that has to do with sales results what we call is as a result of cash sale or turnover. We also have got the cash transaction whereby it's a purchase, and these arises whereby you have got cash purchases or payment. Our note number 2 is that in the case of cash transaction, I want to note this one very carefully, because students always confuse this point of view and that of credit transaction. That in the case of cash transaction, whether it's a sale or a purchase of good or service, in this case, there is nothing like debtor-creditor situation being created. All right? Good. Then let's go to case of credit transaction. What is all about credit transaction? Now, this is also referred to as deferred, from the word postponement. So it refers to a payment which entails exchange of goods and services, with the payment being done at a later date, either after a week, month, or in terms of years, based on the nature of the credit terms and the conditions which have been agreed between the two parties. All right? So I want you to note this. Now, in this case of a credit transaction, we have got the credit sale or credit sales, where the business creates a trade debtor account or a receivable. Also, on the same mode, credit purchases is a case whereby the business creates a trade creditor accounts payable. Nota bene too, now in this case, I want you to take this one seriously, that in the case of credit transaction, and debtor creditor occurs in that business. All right? So the next thing we need to look into, after knowing about those few terms that are used in ledger accounts, we go to the classification of these accounts. So how are accounts classified? In accountancy, there are two main types of accounts that are used in recording business transactions. Those are personal accounts or personal account classification And we have got impersonal account classification. Now, these are the mainstream classification of accounts. But then, when it comes to personal account, it is further divided into what we call debtors account and creditors account. What about impersonal account? In a similar manner, it is divided into two distinct sets. That is the real account, and number two, we have got nominal accounts. Now, for the case of real account, it is further classified into number one, tangible asset account, and number two, what we call non-tangible asset account. And in a similar manner, nominal account is further classified into two, that is income account and expense accounts. Now, these accounts are further subdivided as follows. For income, we have got income which is of trading nature. So we've got the trading income account, and those others which are of operating nature, or what we call the operating income account. In a similar manner, expenses are also further classified into trading expense accounts, and number two, operating expense accounts. So that is the end of that classification in a summary form. So the next step, or the next lesson, we want to look at now at each case at a time and then give a point of detail about the specifications of each category of ledger accounts. Most welcome and thank you. Remember, our materials and notes are available in our website accountingnest.com. Thank you.